Hello, everyone. Good evening. Okay, so in the Q&A, I saw a question, will there be a CDP hour awarded? Actually, for this session, no, you would not have any CDP hour awarded. So you can attend any other sessions, especially the stock pick, then you will be awarded by that. Yep. Okay, so hi, good evening, everyone. I hope everyone is doing well and hope you have your dinner. So today we'll be embarking a journey to explore what exactly is CFD. So can I have a show in the chat? Type 1 if you have heard of CFD, which is contract for difference. Hi, Victor. Victor Lim KL. I assume you're from Malaysia. Hi, Andy. Thank you. Thank you, Jerome. Yes, okay. It seems like a few of you has heard before what is CFD. Okay, so let's start. Yep, okay. So a bit of some disclaimer. Here are the contents are actually all for educational purposes only, and please consult your TR or reminder if you wish to have some advice. Okay. Now, please put in the chat which category are you in terms of conservative, balance, or growth, or aggressive growth. So depending in terms of the portfolio that you have currently. Yep. So most of us are actually bullish in the long term, right? So, SG, okay, yep. So put in the chat, everyone, so I can actually see how's the dynamic like in the group, whether you're conservative, balance, or the growth, or you're at the growth group or the aggressive growth. So aggressive growth means that you have a lot that is in equities. Not necessarily US stocks, but it can be any other stocks. Okay, Victor, growth. Right. Okay, so it actually depends on individual whether what is your risk appetite, right? So actually most of us are actually bullish in the longer term. That's why most of us will be buying and holding our shares for, let's say, more than 5 years for those who are actually in more balance or growth stage, correct? So we'll be mix of some short term to, but mainly in terms of longer term, right? Okay, so be it bonds or stocks or futures in your portfolio, right? Maybe many people will actually buy and forget about it. So let's say a doctor a person who works as a doctor, which sectors of stocks do you think that he will buy? Can anyone guess? It's a pretty easy one. Anyone? So a person who work as a doctor, right? Yes, Yanin, yes, correct. Healthcare. So basically, it shows that everyone that they would actually buy something they are familiar with, correct? Because they will be more familiar with the micro and macro news that they are exposed to. So most probably, the person who work as a doctor will buy healthcare stocks. So which means that actually everyone has an edge towards a certain sector. Let's say be it like you're working as healthcare, or so let's say, for example, I'm working in the finance industry, so I'll be more familiar in terms of how our brokerage works, how banks works. So most probably I'll invest in those stocks, correct? Yeah. So a lot of people, let's say, for example, as we know that we buy and hold the stocks, correct? But let's say, for example, let's say this week, like Apple, Microsoft are releasing earnings, correct? So let's say, assuming I'm actually working in a IT sector or those fintech sector, correct? I will be quite familiar in terms of how these companies works. So let's say, for example, when their earnings are actually releasing, I might think that, okay, they might miss their earnings target, maybe, I don't know, by, let's say, maybe 10% or something. So for that wise, okay, originally I was invested in Apple and Microsoft, but I do not want to sell just because that I think that, okay, at this current point where I feel that when they miss their earnings, their share price will drop a little. Let's say, for example, let's say 3 to 5%, which it might be a span of, let's say, 2 to 3 weeks, okay, for this drop. So I would not actually sell my whole Apple and Microsoft shares just because that I would think that this stock would actually fall for 3 to 5% for like 2-3 weeks, correct? So how do I even play my views into put my views into play, right? So how do I actually have that opportunity to actually do something about it, rather than just sitting there and just just ignore about it, because I know that it would actually happen, or I believe that it will happen in this in the future, right? So actually you can use CFD to do this, where CFD actually provide you this flexibility to put your short-term views into play. So let's say, for example, I do not need to touch my shares. I can just use CFD and use CFD to short Apple or Microsoft if I think that they will miss their earnings by, let's say, 10%, and then it will actually, share price will drop by 5 to 10% within 2 to 3 weeks. So technically, you can just use CFD to short within this period, 2 to 3 weeks. It's very short. Okay. So one of the way that you can use CFD is this way. Okay. Now, let's get started. Okay, yeah. So here are the contents for today in terms of what is CFD, the mechanism of it, and then I'll introduce to you what type of asset classes that we have in CFD. And then why should you trade CFD with us? And at the end, I'll actually guide you how do you open your CFD account. Okay, so the first thing, contract for difference. So first thing, contract for difference is actually a derivative product. Okay, similarly to options, futures. So this CFD is actually the product value is actually dependent upon an underlying asset, be it stocks, commodities, currency, and market indices. So CFD is actually just a virtual contract, I would say, between you and the broker. So it's actually a contract between a buyer and a seller. So broker is just a person in the middle that actually facilitate these trades for those who wants to buy and sell virtually. Okay, so traders actually pays the difference in price when they open and close the contract. Okay, I missed the end, and close the contract. Okay, so CFD is also over the counter, where CFD is not listed on any exchanges. It's only traded via brokers. Okay, so you only can get exposure on the underlying. I mean, you can trade CFDs only through brokers lah. Okay, the last thing, the most important thing is the part where you do not own the underlying. So let's say, for example, if you buy DBS OCBC, or you buy DBS CFD, I mean, or you buy Apple CFD, right? You do not own the underlying. You just open a contract, a virtual CFD contract saying that you are willing to buy at this certain price. So when you close at the end, it depends on the price is higher or lower, then you close at it, whether you make a profit or loss lah. Okay. Right. So next, which is the mechanics of CFD. Okay. So the golden rule here is similarly when you trade in other asset classes, let's say for stocks, it's also the same thing, where there's bid and ask, correct? So you always buy on ask and you sell on bid. So the bid is actually the highest price at which to pay for. So the ask is where the lowest price at which the seller is willing to accept. So you technically buy at ask and sell at bid. So the spread is actually the difference between bid and ask price. Okay, simple. Now, so this is an example, an order ticket from our most popular platform, which is our PointsBase platform. So for this particular counter, which is OCBC, so this CFD counter that tracks the underlying share price of OCBC. So technically, the price that's quoted here would be actually, I would not say same, but similar to the underlying of OCBC shares that you will see on our PointsBase platform too. So CFD and equities is different now, which I'll explain more later. So it's the same thing. So this will be the bid, which is the price that you sell at. This is the ask price, which is the price that you will buy at. So in CFD, we have this thing called margin requirement, which is 10%. So which means that you need to put 10% of your capital to actually open a quantity size of 100 of OCBC. So in terms of 10%, you need to put up $129.30 Sing dollar. Yep. Okay. So this one is an example in terms of how you would trade a CFD, in terms of whether you are longing it, which is you buy, or you shorting it, which is you hope the price to go down now. correct? So let's say, for example, for S&P 500 index, which is USD1. So USD1 is our mini index contract, which I'll show you more later. So now I need you to know the concept of how does a CFD work and how do you calculate the profit and loss and everything. Okay, so now the price at T0, let's say for example, now you are buying it at 37,000. So when you're long S&P 500, you think you are expecting the price to increase, right? Because everyone makes profit. Okay, everyone wants to make profit. Okay, so 37,000. So the index point is 1. So every index point, how much is it worth? It's USD1. Okay, so the quantity lot, which is 1 lot, is 1 CFD contract. Okay, you can buy 1 lot. So let's say the margin requirement is 5%. I mean, it is 5% now. So it's 37,000. You times $1 index point and you times 5%. And then you times 1 is because another 1 is for the quantity there because you're buying 1, I'm assuming, correct? So you are requiring around 2,480 Sing dollar, okay? Because the underlying is USD, okay? So let's say, for example, later on, the price at T1, let's say 1 month or something, the price is at 38,000. So the profit, how you calculate profit is 38,000. The closing price minus the opening price times USD1 times 5%, and then times the quantity. And then this is the profit that you get, which is around $67. So let's say, for example, in another case, which is where you short the 500 S&P 500, you expect the price to go down, correct? But the price actually went up, correct? Yes, at 38,000. So when you short at 37,600, same thing, USD1 index point, 1 CFD contract. So you're required to hold at 2,520 for Sing dollar, correct? So here will be at a loss, correct? Because the index price actually increased to 38,000. So which means that you're at a loss at about $27. So this is just a mini contract calculation, okay? So this is how you actually calculate your profit and loss. Okay, so next. Okay, so this one is actually our S&P 500, which I've shown you just now. So this one is very important because a lot of our clients and a lot of our traders that actually, I mean, those who are advanced traders, they would understand now. So we are quoting based on bid and ask, correct? But here on our Williams chart, it is actually shown as mid price. So what do I mean by mid price? So mid price is technically the middle price between the bid and ask. So which means that the mid price, how you calculate is you use the ask. Okay, this one is an error. So you should use ask plus bid price divided by 2. So the middle price will be the mid price, called the mid price. So this mid price is actually these two's mid price. So whenever you see, right, because index is always done at bid or ask and not last done price. So the last done price will be shown here, which is at that point of time of screenshot, it wasn't shown, okay, because the market was closed, okay? So you must remember that the mid price is not the bid and ask. So when you actually see our chart, right? Oh, sure. So when you see our chart, it would always show as mid price, okay? Not bid and ask. So the bid and ask you would need to actually see using the order ticket, okay? So the different type of asset classes in CFD. Okay, so first and foremost is we have the most basic one, which is the CFD equities. So we have quite a lot of counters offered in different kind of markets, Singapore, US, Hong Kong, which I'll show more later. So we have also the main 18 market indices ranges from S&P 500, Nikkei, and China 850 also, and Singapore index we also have. Okay, and also the 7 main commodity CFDs, which include the precious metals, gold, silver. We have the big contract and the mini contract for gold, but silver we only have the big one. And US and also UK oil, which is the Brent and WTI. Okay, so and last and foremost, which is our FX CFD, we have total of 38 pairs, which including those common pairs and some exotic pairs lah. Okay, sorry. Sorry, I think something's wrong. Okay, hold on, yeah. Okay, sorry. I mean, can everyone see my screen now? I don't know why it just like jumped to another link. Yep. Okay, thank you. Okay, right. Okay, sorry. Let's continue. Okay, so the first thing, yes, our CFD equities. So these are all the available counters and all the different exchanges that we offer. So we have Singapore, Tokyo Stock Exchange, Malaysia, Australia, China, London, US, and also China. Okay, so there are also quite a lot of different industries and sectors that you can trade in, and depending on what you want. So let's say, for example, you have those counters that you would like to trade, but we do not offer. So please do call in or send email to our CFD email so that we can actually help you to see whether we can offer that particular counter that you want to trade. Okay, so we are quite flexible on that. Just email in. Okay. Okay. So this one on our points platform, we have actually different types of it's called so-called symbol. So it's actually quite important for you to know on our points platform. So we have CFD, CFD, DMA, and equity. So CFD, which is the normal contract for difference, and the DMA is the direct market access, which I'll explain more about that later on. So EQ is actually the equity side, which is the normal shares that you will have. Okay, so let's say, for example, you trade CFD. So CFD is the most important thing is where you get the exposure of the underlying, but you do not own it, correct? So, but if you select EQ, which means that when you buy OCBC Bank, you will actually own a part of OCBC Bank. You will own the underlying share. But CFD, you do not own it. Okay? Okay. So now the difference between CFD, DMA, and CFD. So actually DMA provides more liquidity, and for those traders who would like to participate in the order book of the exchange. Okay. So those who actually, let's say, for example, when you send in a order to us, so let's say, for example, this person, he sent in CFD DMA to us, Phillip Securities, correct? So we will send the order directly to the exchange, and it will be executed on exchange. So, and then after that, when it's executed, it will actually reflect to you whether is it done or not. While actually CFD, when you send your order to us, the order will be filled by us, which is either our code, which is bid or ask price. So the DMA is where they actually like quote, right? It's actually based on the exchange. So your order will be directly, everything will be done on the exchange. It is just a gateway where we send your order into the exchange, okay? But it's different when you just select CFD, where your order will be done on our side. So based on bid and ask start. So your order may or may not be reflected on the exchange depending on how your order is done, on how's the liquidity like. So it depends your order, where is it be done, but it's actually similar, just that those traders prefer to actually see more transparent and more efficient kind of trading environment, because that's what you get when you trade on the exchange. Okay, so you will actually have more faster execution of orders, and then you will have access to real-time market depth also if you go through DMA. So the orders execution for DMA also based on last done price. It does not based on bid and ask. Okay, so that's a few difference of it. And also DMA orders actually based on last done price with price or time priority. But for CFD, it's not. It's just based on the bid and ask price quoted, which is quite black and white. So if you were to call in to see whether if your order is done or not, we would actually have to check whether whether the bid and ask price is at the point of time, whether it's there or not. Okay. Okay, so here we have next, which is our commodity CFD. We have gold, silver, and oil. So this is the top three most traded commodities in the world. So the first thing and foremost, where there's no expiry. So which means that when you buy, it will auto roll over for you. But whereas if you get exposure to these kind of commodities using futures, it would have expiry, which you have to manually roll over yourself to the next month. Okay, so This margin can be as low as 20% for different types. So let's say, for example, as you can see, we have the mini contract for gold USD and a bigger contract for gold USD 100. So it depends on every index point. Let's say, for example, from 2000 to 2001, how much does that 1 point worth? For gold USD 1, a mini contract will worth $1, right? So if you buy USD 100, it will be worth $100. Okay, so that's how it goes up. So we have the UK oil and US oil. Okay, for those who are interested. Yep. Okay. So the last thing is not the last thing, the last second, which is the CFD indices. So the CFD indices, what is actually the indices is? So index itself, it actually represents a value of specific group of companies, correct? Where it actually reflects the performance for a particular market or sector. So let's say, for example, this one, the S&P 500 visualization. So the S&P 500 technically represents the top 500 companies, correct, in US. Okay. So here we also offer multiple size contracts, similarly to the FX indices just now. Okay, so this FX indices, it's a valuable tool for you to have your hedging and portfolio diversification, correct? So let's say, for example, you want to you want to get exposure to the underlying, but you don't really want to own it. You can actually buy through CFD. It's actually quite different from those let's say Vanguard and those others futures that you will be buying. Okay, so you can actually spread the risk across different asset classes and geographical region. And then the margin is also quite low as low as 5%. So for those who are actually quite interested in terms of playing in a short to medium term, you can actually choose to use CFD as a medium for you to play out your views. Okay, so these are the different indexes that we provide. Okay, so we have China, Hong Kong, Japan, KL, or we have the Singapore and US also, which is another list. Okay. Okay, right. So the last thing is the FX CFD that we have. So these are the different FX pairs that we provide. The common one we also provide, which is the USD Japan yen, and the USD, this one, British pound USD. Okay, USD and AUD Japan yen also we provide. Okay, so these are actually okay, so FX CFD, the value of currencies bought and sold on a daily basis can also be up to 7.5 trillion, which means that the FX market is actually quite huge as of April 2022. But imagine in 2024, it will be much bigger, but I couldn't really find the statistics for this year. So it's fine. Okay, so in Phillip Securities, we offer 38 FX pairs available for trading. So for those exotic pairs that you would like to trade, you can also send email to us and we will evaluate whether it's suitable for trading or not, because we need certain liquidity for it too. Okay, so FX markets, the good thing that what we provide FX CFD, correct? It is actually quite good is because the market operates for 24 hours and 5 days a week. So at the same time, you do not actually own the underlying of the currencies, where you may have to go for actual delivery when you trade at a spot FX. So technically, this is actually quite usable for quite a lot of traders. So a lot of our clients actually use our Poem CFD MT5 for it. Yeah. So for those who have already used MT4, they'll try our MT5 platform. Yeah. So in this place, yes. So this is our Poem CFD MT5, and this will be our Poems 2.0. So depending on your trading style or what you like. So because our Poem CFD MT5 is have much advanced feature, but so those who know MT4 would know, right? So this currency pair, USD Japan yen and also Euro FX. So it's the same thing. Bid, you sell a bid, you buy it. Same thing here at our MT5 order ticket. How you do it? So here on in actually Phillip Securities, you only offer the mini lot, which is 10,000. So because on spot FX market, they only offer the 100,000 one, right, for the standard lot. So here we actually offer only the mini lot. So here in the middle, we will actually show you the spread on our POEMS 2, but unfortunately for MT5, we do not have that. Yeah, basically, you might need to calculate lah, but it changed quite instantly, like maybe 0.01 second, it will change. So it's quite hard for you to actually see the spread, but it will be actually the same how we code. Okay. Yeah. Now, so I'll just keep it short and sweet. Why should you trade CFD? Right. Now, so most importantly is both directions. So CFD provide you the ability to long and short, depending on what strategy that you are using. So the second one is where you use very little capital, so as low as 5% margin. So technically you just need to put up 5% of the capital, and then you can own you can get exposure of the underlying. So people would like to use CFD, will play around the leverage that, depending on what leverage they want. Okay, so which bring us to the access to leverage. So you can have leverage from 5 times onwards. So let's say, for example, you have quite a lot of capital and you would like to put it with us. So we do provide the platform to you where you can actually negotiate with us a higher leverage if you want to. Yeah, so that's possible. And which I showed you just now, we also provide wide range of counters, 5,000 plus counters. So from index to different markets of stock counters, depending on what you want. Okay, so those who are not in there, you can also request. So we also provide quite competitive spread, which I don't go in depth here, but you can actually compare our prices on our website and actually compare to our other brokers in terms of what are they offering and what we are offering. Okay, because we are quite confident that overall our spreads are actually narrower. We will see in terms of the mid to lower range, yeah, of the spectrum. Okay, the last thing is you have a various platform to trade CFD, which is our POEMS tool, which is our mobile P3, which is on your mobile, and those specifically who likes MT4 would have an option to opt in our MT5, which is our MT5 desktop and mobile MT5. Okay. So here are some of the platform features for our POEMS 2 and POEMS CFD MT5. So the commission rates, which I'll show you later, for POEMS 2 is standard, but POEMS CFD MT5 is lower. So why is it lower is actually because how we think that clients who actually trade on POEMS CFD MT5 will be more self-serve, where quite a lot of things that they would actually need to do themselves instead of calling in to our CFD desk. But overall, it's actually quite usable and quite user-friendly, I would say, for those advanced traders who like small or advanced order types and all. Okay, so the watch list, yes, it's quite a standard one. And then credit limit for POEMS 2 is around 200K, but for POEMS CFD MT5, technically you do not have any credit limit. Yeah, but you will be subjected to margin call more often if you exercise it I exercise it to a maximum, I would say. I mean, there's no maximum, but it depends on whether you're losing or you're profiting. Okay, so for counters, whereas for counters we have around 5,000 in POEMS 2, but for POEMS CFD MT5 currently we have 450. So our CFD MT5 platform mainly offers US and our FX and the indices, which is our commodities. So technically it's just these three first. In terms of other markets, we're actually looking into how can we offer in terms of the counters okay, for other markets. So next thing, ledger. So POEMS 2 will be multi, POEMS CFD MT5 will be single. So what do I mean by multi-ledger and single ledger? So for POEMS 2, let's say for example, you are buying S&P 500, underlying is trading in USD, correct? So which means that in POEMS you have different ledgers. So you have Sing dollar, USD, Japan yen, Malaysia ringgit. So there's a ledger of all the different currencies. So you have the option to actually convert your Sing dollar to any currencies that you like that we offer. Okay. But whereas for POEMS CFD MT5, it is only single. So what do I mean? A single is our POEMS CFD MT5 only maintain your ledger in Sing dollar. So let's say, for example, you also trade S&P 500, but the underlying is USD, correct? So what do we do is we only hold the margin in Sing dollar, which is equivalent to how much of USD that you need. correct? Let's say, for example, you may need 3,000 USD. We hold the amount in Sing dollar that's equivalent to that 3,000 USD in MT5. So let's say, for example, when you close the contract, profit or loss, only the profit or loss will be converted into your Sing dollar. So which means that you don't really eat FX fee, or you don't, there's no what do I call it, the debit interest charge for lending you a different currency to trade lah, basically, okay? Because that happens on premiums too. So it depends on what you're trading also. Okay, so that's the single ledger for premium CFD MT5. So next one, which is the advanced order type. Okay, there are quite a lot of order types already on premiums too, which is you have stop limit, you have trailing, you have quite a different one. But for premium CFD MT5, there are actually more than that, which in my previous videos, I've covered it. But if you would like to know more, you can actually go through our website to look back to the videos, because I did teach in terms of what kind of order types you can use. Okay, so the last and foremost, which is the hedge mode. So what I mean by hedge mode, so in premiums though, you can't open long at the same time, open short contract at the same time. So which means that you can't long and short at the same time for premiums though. But you can do that in CFD MT5. So which means that either you lock in a certain profit, or you may lock in a certain losses, depending on how you do it. Because a lot of traders have different trading strategies. So depending on how they want to use this hedge mode, because not everyone is using it. Yeah. Okay. Now, so next thing, which is just a quick view of our premiums commission rates, equities. So mainly I just show you the different markets, which is Singapore, US, and Hong Kong. So technically the minimum commission is 25 for Singapore CFD, and DMA is same thing. But overall, our CFD commission will be lower than our DMA, because we do not send the order directly to the exchange, correct? So technically it will be lower if you trade with us, which is go through us, as compared you to go through the DMA, because DMA you have more extra features like the market depth, and then you can see different B and ask price at different levels. So that's a different ball game, I would say. But that would be at a higher commission. Okay, so the long and short finance charge is all this, which is 6.75 per annum, and the short finance charge is depending on which counter that you're trading, is from 3% per annum onwards. Okay, for US standard USD $15, if you do not hit the minimum commission, you will just charge 15. So the commission, if you trade more than that, it will be based on 0.18% based on the contract value. Okay, long finance charge 8%. So short finance charge 2% per annum onwards. Hong Kong, same thing, HKD 150 minimum commission and 0.25. Okay, long is 7.25 per annum, and short finance charge from 3% per annum. So all of these you can find the info from our website also, but just put a snapshot lah, just for convenience. Okay, next. So this one is our POEM CFD MT5 commission rates. So we only provide Singapore and US, and also certain commodities. Okay, so the main thing, $15, which is cheaper by $10 as compared to premiums. And then our commission is 0.1%. It's also lower. Okay, and 0.15%. So there's actually long finance charge. The long and short finance charge for both Singapore and US will be the same. Just that the minimum commission and the commission is I would say significantly lower. Yeah, because you save $10. Okay, so now let me guide you in terms of how you can open your POEM CFD account. Okay, so you actually can open the account without having to fund in first. So which means that you opt in, you open an account, which is automatically a stock account, and then you opt into CFD. Okay, so I'll just land on this page for a few minutes for you to open or scan this QR code lah. So then you just visit this poems.com.sg, and then you go and open an account. So which means that you can either use Cash Plus or cash management depending. So the cash management is where the shares will be deposited into your CDP account. Okay, so you can choose the facilities you want. So remember to opt into CFD. Okay, because when you opt into CFD, you can actually, there's no maintenance fee for opening the CFD account. So basically you can open and not fund in, but you can actually explore and see what types of asset classes that you're interested to trade. You can actually see through what we have, what kind of order types that we have. So it's all accessible online now. And it's actually quite, you can take it as a demo account, but just without money. Yeah. So once you're done exploring, but you're welcome to fund in. Okay, so for those existing customer, you can opt in through your Poems account. You just log in, and then after that, you go account management, and then you go CFD, you go online account opening, and then you just choose to opt in to CFD and complete the CKA and risk fact sheet. Because this need to trade CFD, you need a certain level of knowledge, okay, and certain risk. Okay, so for this, for transfer, internal transfer from stocks to CFD is from account management CFD online form. So once you have your account, you just go to withdrawal form. I know it's a bit weird, but it's just withdrawal form because you need to withdraw from your stock account to CFD account. So withdrawal form, input how much you want to put, and then you just to transfer into what CFD account. The most important thing is there's this CFD. Oh, okay, it's half of it, but yeah, something like that. Okay, so for those new account, so you can actually direct credit into our CFD account. So you can just scan this QR code, and then when you input your reference number, you need to put your CFD account number under the reference, and at the back you have to put CFD. So please add CFD in the addition to the 7-digit of your account number. Okay, so you actually can watch the Pay Now tutorial link for you to direct credit into our account. Yeah. So I think my colleague actually put in the link there. Yeah. Okay. Thanks. She may not make this up. Okay. So this is the direct crediting. Now, so a quick shout out to our promo that we have for this month until March. So as long as you fund as long as you opt into our CFD 55 account and fund in $2,000, then you can actually get a $30 bonus cash credit. So you can actually scan this QR code to learn more about it, and you can actually withdraw this cash credit line. It's actually cash. So you just scan this QR code, and those who are actually interested. So it's actually a good time to open a CFD account. I mean, CFD, and then you CFD account, and then opt in to Amplify. Yeah. So now Q&A session. Is there any questions? I'll hold on the line a while. Is there any other questions from the floor? Okay, Stephen Chan, you raise up your hand. Yep. You can unmute if you want, or you can just type in the chat. Anyone else? Any other questions? So how do I know what is the margin for different contracts? Okay, it's easy. So once you open the contract, once you open the order ticket, you can actually see what is the margin. Yes. So I believe that on our website, we do have that. Let me have a look. So when you go products, CFD, yeah, so we have it here, which I'll show it to you. So we have the contract list, specifications, and trading hours. So the product list you can actually see. Let me send the chat. Yep. So there's XL below that, depending on what what market that you want to trade. So let's say Singapore, you can just download the Singapore contract list, CFD product list. Yep. Then you can actually view over that. Or you can open the CFD account up and then just open the order ticket to check what's the margin. Yep. Okay. Anyone else? Yeah. Okay. So for those who would like to know more about our CFD, there's this our Poems Pro and Poems 2. So you can actually go to our website. So this is the MT5 one. Oh, hi, Chiwan. No, for this, you do not have any CPD hour awarded. Yep. Yes, because I think those webinar would need to be accredited, but I think certain government body, yeah. But I don't think this would award you any CPD hours. Yes. But you can join the stock pick next time, because stock pick actually do provide CPD hours. Right. So this would be the MT5 for those who want to opt in and actually check more about MT5 so they can get the promo. Yep. $30 is quite worth it. Okay, any more questions? Okay, looks good. Okay, so if there are any questions, please email to CFD, or you can call into our desk number. So you can just get a screenshot for it, and then yeah, just keep in touch. Okay, thank you everyone for attending my webinar today. I'll see you next time. Thank you.